Well, China's economy barely inched forward in the second quarter, reflecting a colossal toll on activity from widespread COVID lockdowns. Economists say the slowdown is putting Beijing's growth target increasingly out of reach, particularly as the emergence of the highly infectious BA.5 subvariant is raising the threat of fresh lockdowns. Now, China's GDP expanded just 0.4% on year, narrowly escaping a contraction, and shrank 2.6% on quarter. Now, analysts say that the latest print puts first half growth at just 2.5%. Now, this means Beijing could miss its full year growth target of about 5.5% by a wide margin for the first time. Now, the frail data already prompted Goldman Sachs to downgrade its forecast to 3.3% from 4%. The labor market also giving few reasons for optimism. While the national jobless rate has eased, youth unemployment rate hit a record high of 19.3% in June. And as a large buyer of commodities from oil to coal to corn, China's slowdown is a blow to a global economy already hurt by recession fears. China is steadfast on its tough zero-COVID policy amid fresh flare-ups, which will impede a rapid recovery. Authorities are expecting growth to be muted.
世界经济滞胀风险上升，主要经济体政策趋向收紧，外部不稳定不确定因素明显增加。 国内疫情影响还没完全消除，需求收缩与供给冲击交织，结构性矛盾和周期性问题叠加，市场经营主体仍比较困难，经济持续恢复基础不稳固。
Well, further dragging on China's economic growth is a continued slump in its real estate sector. Home prices have fallen for the 10th month in June as the property crisis deepens. Now, average new home prices in 70 cities slipped 0.1% on month in June. Now, that is slightly better when compared with May. On-year prices declined by almost 1.3%, and the fall in residential sales eased in June as many cities emerged from COVID restrictions. Sales fell 23% in June from a 42% decline in May. But the outlook for further upside is dimming amid the mortgage boycott and other flare-ups in coronavirus cases. Our sales have now fallen for 12 straight months. It's the longest slump since China created a private property market in the late 1990s. And the $2.4 trillion real estate market is showing few signs of recovery, adding to woes for an economy that barely expanded last quarter. Contagion is spreading to the financial system as a growing number of home buyers are refusing to pay mortgages for unfinished apartments. Well, in a matter of days, investor sentiment on Chinese stocks has shifted gears. So from fears of missing out on a recovery in Chinese markets to questioning if the economy has bottomed out. The fines on tech giants also dimming earlier hopes that a regulatory crackdown is nearing an end. Now, July fast becoming another month of sell-offs on reports that home buyers have stopped paying mortgages to protest unfinished projects. That's a move that could threaten social and financial stability. A mortgage boycott may pose a bigger risk to regional banks, given the high concentration of such loans among them. And the stress from the housing and banking sectors come as China reports its slowest pace of economic growth since the onset of the pandemic, as you saw earlier. Now, that's pushed banking and real estate stocks lower. The benchmark CSI 300 index of the biggest Chinese stocks closing about 1.7% down. And in fact, it has fallen 5% this month. Country Garden under major selling pressure today as well, closing the day nearly 9% in the red. And that pain is spreading to the tech sector as well, with Alibaba's Hong Kong shares plunging on reports that its executives were summoned by authorities investigating theft of police data. Now, those tumbled about 6% at the close. Other heavyweights like Tencent and Meituan also ending today lower.